let me take you back to 2 years ago. It was the start of 2022. We had just had an unexpectedly busy 2021 with lots going on in the real estate market, prices increasing, soaring demand, and we were about to see another surge in 2022. Interest rates were around that 3.6% range, and the median home price was about $435,000. The market was busy, there were multiple offers on homes, and it was still somewhat affordable because of these low rates. Then what happened? Well, interest rates went up, affordability went down, demand went down, and everything slowed down. And everyone thought we were in for some really big price drops as well. But that didn't happen. Rather, prices kind of stayed the same, had a little bit of fluctuation, maybe went down a bit, but generally went sideways. And the market certainly didn't crash. Now, not to say that a crash still can't happen, but the Cromford report just shared their 2-year change in prices, and it's pretty unbelievable to see. So this is based on the annual average dollar per square foot over the last 2 years. This is only for single family detached homes, and they have it broken up by the largest cities throughout the Phoenix area. You can see Paradise Valley is really leading the pack at a 42% increase in average dollar per square foot over the last 2 years. Now on the bottom, we've got Arizona City, Sun City, Tonopah, Sun City West. You'll notice also Sun Lakes is down in that group. So those 55 plus communities saw the least amount of growth in the last 2 years. We also have a few cities that are kind of in the outskirts of the Phoenix area, like Buckeye, Florence, Queen Creek. Those didn't do as well over the last 2 years. But then you take a look at New River, Waddell, Anthem, all of those are somewhat on the outskirts as well, and they're a bit higher on the list. Now, if we look at the median change in the average dollar per square foot increase throughout all of these cities, it's about 13.8%, which is really wild to think of. So typically what we see in terms of appreciation, if you're in a balanced market, the amount of appreciation in a home is going to be about consistent with the rate of inflation. And since inflation has been so high, we've seen these larger increases in home values and appreciation. But in a typical market, usually inflation is about 2 to 3% per year. If the median increase in these prices over the last 2 years is about 13.8%, that's almost 7% per year as compared to 2 or 3% each year in a normal market. So it's no surprise that we have increased prices very quickly over the last 2 years. And many say we are due for a change, we're due for a crash. This cannot stay this way forever. And not to give anyone PTSD, including myself, but this article says otherwise. Bidding wars erupt in 2024 as the year kicks off, with some listings seeing over 30 offers. By the way, if this information is helpful for you, make sure to hit the like button and share it with someone who would find it valuable. So of course I had to dig into this article and find out what is going on. So a few different realtors from other areas of the country were reporting on activity. One in St. Louis saying that they're getting bidding wars anywhere from 20 to 30 offers. It depends on the location and the condition of the house. According to Redfin, mortgage purchase applications were up 3% compared to last month, and they've seen requests for tours go up by 5% from this time in December. Another agent in South Carolina is saying that she's seeing bidding wars in cities with good job markets. Now, the question is this happening in Phoenix? Well, in my experience, I have certainly not seen 20 to 30 offers on a property anytime lately. I have seen some multiple offer situations, but nothing too aggressive yet. Now, of course, this article is saying demand is going to depend on mortgage rates, and I think that's very true. So what's going on with mortgage rates? Well, last week they didn't move too much, which is a really welcome thing for buyers. Rates are around that 6.5 to 6.75 range right now, which is a really nice change from the peak in October where they were about 8%. This article is even saying that the dip in rates has provided buyers a savings of $325 a month on their monthly payment from the all-time high in October. So last week we got some economic data that could have potentially changed mortgage rates, but it really didn't do much. We got the CPI, that rose 0.3%, so that was higher than expected. But quickly after that, we got the PPI, or the Producer Price Index, and that unexpectedly fell 0.1%, so that was positive news for the markets and is one of the factors that allowed mortgage rates to stay the same. Now, although the Federal Reserve was optimistic about cutting rates in 2024, there's still a little bit of confusion on that. the Fed's Bostic warns U.S. progress on inflation is likely to slow. He's saying that inflation could seesaw if policymakers cut interest rates too soon, and he warns that inflation's descent towards the central bank's 2% goal is likely to slow down in the months ahead. In fact, he says there's some risks that inflation could stall out altogether. He anticipates that inflation could be near 2.5% by the end of the year and then hit the Fed's goal in 2025. So basically, he's not so confident that we are going to continue to see all this progress in inflation. And why we care about this in the housing market is because what happens there is going to affect mortgage rates. And if mortgage rates start to go back up, that will certainly affect our demand. And therefore, as a buyer, you can't afford as much home. And as a seller, you won't have as many buyers interested in your home. And what happens at that point? Well, it's harder to sell your home. So the last few weeks, as I've been talking about the Phoenix market, we've been seeing a lot of strength in the CMI, or the Cromford Market Index, which is really an indication of the future direction of prices in our market. It looks at supply and demand factors. And you guys, I gotta tell ya, it's continued to be strong and has only gotten stronger over the last week. So today we're sitting at 113.9. We've seen a bit of an increase in demand, and once again, we've seen supply go down as well. And for anyone who's not familiar, anything between 90 to 110 is considered a balanced market, and above 110 is considered a seller's market. So we are further climbing into this seller's market right now. As for demand, that's 29% below normal, but our supply is sitting about 38% below normal. So if we continue to see our supply go down and our demand go up, our overall index is going to increase, meaning we're headed into a seller's market, and therefore prices will stay stable or potentially grow. Now, if you've been following the CMI and wanting to look at every city throughout the Phoenix area to know what's going on, or particularly with your city, brace yourself, because we are now seeing every city with a green arrow, which is the first time in months that we've seen this. Now, what this means, if you're not familiar, this means that every major city in the Phoenix area moved in the direction favorable for sellers over the last month. Fountain Hills is leading the charge at a 20% change. Gilbert and Glendale also had pretty big changes over the last month, as well as Surprise and Queen Creek. Now, if we break this down to look at the CMI of each city, we've got Cave Creek, Queen Creek, Buckeye, and Maricopa all still in a buyer's market technically. And then a couple of cities in balance like Paradise Valley and Surprise, Goodyear, and Peoria. And then everything from Tempe up to Fountain Hills is technically in a seller's market. There's been an average change over the month of 10% increase for all of these cities. And last week when I talked about this, it was a 6% change. So we are definitely seeing some acceleration in a positive direction for these cities. And when I say positive, I just mean a higher number, not necessarily positive or negative, depending on if you're a buyer or seller and what your preference is. Now, if you're a seller, this is really good news for you. It means there's more strength in the market. It means that you have more of an advantage as a seller, and you can likely push your prices higher if this trend continues. If you're a buyer, this means that we might start to see some bidding wars. We might start to see sellers get a bit more aggressive with prices, and you could possibly be in competition with other buyers. Now, just looking at this screen, I can't black and white tell you that that is exactly what you'll face, because it does depend on the location of the property, the condition of the property, and frankly, the price point of the property as well. But overall, we are coming out of a softer balanced market and into more of a seller's market. So if you're a seller and you've been waiting for the market to kind of come back to take advantage of that, we may be turning the corner in that direction. Check the description below to get an instant home valuation. And first-time home buyers, make sure to check out this video right here to learn how to prepare to write an offer.